Good afternoon, friends. Thank you very much for joining this very, I would say, a seminar which I was always looking forward to interacting with none other than, I would say, from a very startup firm to India's one of the largest and the most respected, not only I would say into the insurance industry, but a person who has contributed to the financial inclusion for this country, none other than Mr. Yashish Dahiya. Welcome, Mr. Yashish. Thank you very much once again for joining this webinar at a very short notice.
So, Rajesh, pleasure to be here, and apologies for being a few minutes late.
Absolutely fine. I think Mr. Yashish doesn't need any introduction. He's not only known for his sharpest mind for the financial inclusion, but he's also, I would say, I read a lot of things about Yashish, before actually, I bought the stock in, about 3-4 years back. So one of the, I would say, a person who always challenges himself, be it sports or be it business. That's what I think defines, Yashish. So I think the one thing which I'm still learning from Yashish by, reading his a lot of interviews which are available is how to be disciplined in your life, and probably, he's known for running and swimming and I don't know what not. I think we know only limited thing on the published thing, and I'm sure there might be many more other things probably what Yashish is expert on. So I think, that's a great journey. And let me start, Yashish, a starting point, that's the starting point which I would like to start from. That, from 2008, you started this journey of Policy Bazaar. But before you started this, Policy Bazaar, what was the thought process, say in year 2000, whether you would have thought that in 2008, I would start something called, Policy Bazaar, what made you to start Policy Bazaar and what was running in your mind when you started this?
See, Rajesh, I think when I finished my education in India, I somewhere knew that I would enjoy entrepreneurship. I somewhere knew that. But what I did not uh, have was anybody in my family who had ever done anything in business. We were all army people. So that concept was quite alien. And so I stuck to just doing jobs. And, by 2001 or so, I was working in Bain in the London office, let's say earning £100,000 or something, which in, today's money was maybe 2-3 times that.
Mm-hmm.
And, having a mortgage and having a family and all those things that come with it. And I could not think of leaving that and starting again, specifically without a salary, and all those things are quite complicated, right?
Sure.
So I think in a way things happen, and I would say 2003, 2006 time frame, I saw a lot of potential in financial services, educating the market, price comparison, product comparison, all these kind of things. And eventually, by the time we got to Policy Bazaar, it was quite different. Now, there were in the background certain experiences happening. And when I talked to my cousins, because we were 8 cousins, I would say, or maybe a little more than 8 cousins, 8 cousins on one side, and maybe another 8 cousins on another side, their experiences and their observations about what was going on around our lives was probably not as sharp as mine on certain aspects. And those almost always had to do with social security. So my observation of when one of our uncles died in 1983, and the financial difficulty their family had to go through, and not just financial difficulty, but also operational difficulty, because where do children go to school, where they stay, rentals, etc., all those things were much sharper than, let's say, my sister's observation or my other cousin's observation on the same matter. When one of our uncles was, all of our people, as I said, joined the army. When one of our uncles was just before he was supposed to join the army, was jumping over a fire on the day of Holi, and his foot got burnt. And the way his life changed, where today he earns less than my driver after 1.5 generations. And what that does to just a foot burning, not a big deal, just 1 foot burnt. And it's not such a big thing. He can walk. He just walks with a bit of a limp, right? But that one event, how it changed his life for the next 2 generations, is just my observation, and my fear, you may call it, or was a little more acute than of other people I have observed. I even remember discussing with my wife very, very early on, things like pensions and the need for saving for pensions. And she just felt I was mad, because I told her by the time we grow up, we would need maybe 5-10 crores of savings just from a pensions perspective. And I think that is quite reasonable, you would agree, today. But talking about that 30 years ago did not make sense, right? So I think my ability to look into the future, look into the past, look at social security a little more deeply, and the fear really stemmed from I was the first person in my family to go into a private job. And in a private job, it may not seem so to you, but you can get fired in 3 months with a 3-month notice. And what do you do then? You have no social security, right? In the army, there was always healthcare, education, pensions were always taken care of. And so for me, that concept of not having those things was very alien. And I think, why am I saying all this? Because when I set up Policy Bazaar, none of these things were at the back of my mind, but they were part of my inherent belief system. So as I started Policy Bazaar, within 6 months, we gravitated towards essentially social security. We were the first company that started talking about term insurance, health insurance, now pensions, child education plans. And I think that would have happened, whatever I had done, that would have happened automatically, because I would have automatically gravitated towards that. And I think in India, I found a very fertile ground for it, because this does not apply in the European context, because they've historically had social security. Now that may fail 10 years from now, but that's a different story, right? And that's the other thing, right? So I can see that failing, and I can see opportunities start to appear there already, maybe a little more clearly than others can. But I think in the Indian context, as I see it, and as I have seen it all along, there are 4 or 5 categories of people, right? Economically, one, extremely wealthy, largely control India, and do not need any financial support from anybody. I think there's about 500,000 to 1 million such people in the country. There's another 30 million odd people who pretty much live the same lifestyle as the upper middle class of the Western Europe. So again, then there is about 200-300 million people who live the same lifestyle as people of Brazil. Pretty much $6,000, $10,000 per capita income. After this comes another 500 million people earning about $2,000-3,000 per capita, right? And then comes another 500 million who pretty much has no income besides some kind of government support or some kind of subsistence farming, etc. And I think it's important to understand India in that context, because who are our customers? Our customers are the 30 million people. Those 30 million, if you think about it, those 30 million have credit cards. Those 30 million have, financial ability. There's enough, as they call it, thick files on them. You have enough information about them. The next 200-300 million people is who are aspirational, who want their children to do well, who do not want a lottery ticket. They are hardworking, families, and they will pay for their own children's education. They will pay for their own healthcare. They will pay for their own social security in terms of death cover, pensions, if they can find that money. But affordability is hard for them. And I think my big objective over the next 10, 15 years is, first of all, these numbers in India, you don't see anything in static. So this 200, 300, 400 million people that we're talking about will double, right? So this will become the largest part of India. And I think my job is to make sure that as this part evolves, this part has social security, which, albeit they have to pay for it, but they have social security. And so they have health insurance, they have term insurance, they have pension, and they have child education. And today they don't quite have that, right? So they struggle with that whenever it happens. But I'll stop there. I'll pause there. But that is really, where Policy Bazaar comes from and what it tries to solve for.
I think very, deep thought. And when I see, I'm actually going to the end, what I would say that actually I thought I will ask at the end of the session that, you're entering into kind of a, I would say, hospital, not as a business, but with a little bit different motive. And I can understand your seeds of Policy Bazaar when you founded this company as a, that social security and pivoting your business model on daily basis. On that, I can see some, deep thought behind that entire process. But coming to the insurance industry, when you look at on the macro picture from when you started in 2008, and if you read at that time any global consultancy report on India's insurance sector, I mean, they all had a very detailed and very high growth kind of promising reports, right? But when
Has
you
it
look at,
worked? Has it
yeah,
worked?
and yeah, absolutely. And it has not worked the way in which probably it should have been. Because if I look at the life insurance industry, the compounded growth for last, 10 years, it is still around 10, 12%. And when I look at the penetration, it is also around 3%. So what's wrong? I mean, why that angle of social security is still
I think,
not a.
what is wrong, Rajesh, is that the thought hasn't, all these reports have not really gone into the purpose of those products and life insurance and health insurance. See, today, if you look at our country, we are lopsided towards life insurance and have been. So when
Yeah.
we started in 2008, one of the reasons Policy Bazaar became Policy Bazaar was because the total premium going towards health insurance and term insurance was less than 1,000 crores. Total
Mhm.
premium in the country. Now, the country
Mhm.
had insurance was $100 billion. So whatever number of crores that means, I think
Mhm.
that means what? That means, uh, you know, maybe at that time,
Yeah, maybe at around 40, 42.
yeah. So quite a few, right? And I think the
Yeah.
retail market was said to be $40 billion. So if the dollar, no, it was not 40, 42, it was about 65. I remember it was 60, 65.
Okay.
But let's say 60. So at 60, if you have 40 thousand, whatever, $40 billion, $1 billion was about, uh, you know, 6,000 crores back
Listen.
then. 6,000
Yes.
crores. So you had an insurance industry of 240,000 crores or 2.4 lakh crores, in which
Yeah.
only 1,000 crores was going towards health insurance or term insurance. That is what was wrong with the industry. I ask you, Rajesh, I ask any person, you've got a few people here. What product would they like to buy meaningfully? As they say, meaningfully, thoughtfully for their families. In the entire insurance bucket, would it not be health insurance and term insurance if they had to buy a product?
Yeah.
Why is the rest of the stuff selling? Why are they buying all that other stuff? It is not because it's meant for their family, it's meant for somebody else's family who was benefiting from that sale. Now, that is what was wrong with the insurance industry. And I think either all the analysts were too nice or too naive, or I don't know what to say,
Yeah.
why they were predicting the growth of the remaining part also. But why should a product which you don't want be there? So now, please don't get me wrong.
Yeah, yeah, I
Thing
completely
is,
agree.
the product that was required was not there.
Sure.
Now, today, if you think about it, that 1% has grown to 20%, but only 20%, right? My bet is, and this is the big transformation I talk about, This transformation has taken 17 years, from 1% to 20%, right?
Sure.
Now, and I'm the only person saying this. Nobody else is saying this even today. But my data was, my belief was still the same back then. In another 15 years, this 20% is going to become 70%, 70.
Yeah.
Okay. Now,
Interesting.
when that happens, a lot would have changed, because the remaining part, which was 99%, not 99, I would say about 75%, because you do have motor insurance there, which is a mandatory product, which will still be there. But I'm saying the rest of it will become quite small as a percentage of the industry. And the industry will grow faster when the meaningful products are sold. Now, the moment you get into meaningful products in a thoughtless manner, you also have problems. My fundamental belief is agency cannot sell meaningful products. Because see, a meaningful product is about understanding risk, very good disclosure. Rajesh, what is a good product? A good product is one you have bought with your eyes open and where you have been accepted as a risk with the underwriter's eyes open. There's nothing new about it. It's a very simple thing. When somebody is being paid to make a transaction happen, and the transaction becomes easier with weaker disclosure, obviously when the battle comes to, that level, the disclosure will suffer. The more opaque a distribution channel, the lower will be your disclosure. That is a reality. In fact, I would say, why do you in insurance have so much distribution? Because suppression is required for sales. If suppression was to disappear, the sales would also disappear and would become much smaller. I know that's a very bad thing to say, but that's the reality. You think about it, why do today a lot of products sell a lot more than very simple ETFs, mutual funds, fixed deposit? Why do they sell so much? They sell because there's a very large distribution behind it. And why is there a very large distribution behind it? So we get it, right? Otherwise, people would not buy those products on their own. If today you remove distribution, I would say life insurance sales will probably become 1% of what they are. 1%. I'm not saying 10%. I'm saying 1%. You remove distribution altogether from the country, it will become 1% of what it is. Because it's not a pull product. There is nobody demanding it. There's nobody who's saying, I really want to buy that, complicated savings product, which will give me this, which will have this 5 years of surrender charges and all those things. There's nobody. There's not a single person who's saying that, right? There are people saying, I want health insurance. There are people saying, I want term insurance. But when those people say that, from an insurance company's perspective, the risk is obviously enormous. It is very easy to sell insurance. One big question, why don't hospitals sell insurance? Because the people in hospital are more likely to be in hospital on a regular basis. And that is why they don't sell hospital. By the way, the most profitable distributors of insurance sell in colleges, sell in young hostels, because that is where people are much younger and much less likely to fall ill, right? So it's all about disclosure capture. And agency is fundamentally not a great way of capturing disclosure because it's an opaque channel. Now, this is the basic thing about those products. So the second thing I will say, when the 70% of this is happening is meaningful products, more than half of that will be online. More than half. So I think this is a transformation we are going through. India is going through the transformation. We're on a good journey, but insurance industry does not change overnight, because to an extent, there are 3 million agents. There are lots of insurance companies. There's lots of stuff that still goes on. It doesn't change very easily. It's a very robust industry. It manages to survive whatever is kind of comes at it.
Yeah, I think, you have hit the nail actually, that in terms of what is required for the customer compared to what is getting sold, I think that's typically in insurance industry, I would say is probably the highest amount of probably mis-selling which is happening. As a digital platform, when PB Fintech started from there, and when I see it even today, if you look at the overall penetration is still what I would say, I think what 2.5%, 3%, correct me if I'm wrong. for the entire industry on a monthly basis. Whereas if I look at, say, China is about what, 8%, and maybe the world.
Again, you are looking at the wrong data, Rajesh. You are looking at it from a financial investor perspective, and you should. I'm looking at it from a solution perspective. And unfortunately, premiums is not the solution. Premiums is a solution for you. And for me, the listed company, premiums is a solution for me. But that's not the customer's need, is not to pay premiums. The customer's need is the coverage, the sum assured.
Yeah.
The sum assured in India, since the day we started, is about tenfold. And the sum assured is increasing rapidly. Because sum assured increases with only two products here, term insurance and health insurance. Boss, in term insurance, your sum assured is 100 times your annual premium.
Yes.
Right? Maybe 200 times your annual premium at times, maybe 300 times, right? And that is where sum assured increases. So I think it is sum assured that we have to measure. And the moment you start measuring sum assured, yes, India is behind the curve, but it is growing very, very fast. It's probably growing the fastest in the world right now. Over the last 10 years, India has had the fastest growth in the world on sum assured. But nobody wants to measure sum assured, because what does sum assured say? Sum assured says responsibility of the industry. Because that sum assured now needs to be fulfilled. It's not premium.
Interesting way to look at it. And when you look at, since you're talking about sum assured, when you look at the total sum assured of the industry, and when you look at the same, which is what I would say bought through the digital as a platform, how much that would be?
I would say about 25 to 30% of the sum assured of the country would be bought through the digital platforms.
I see.
It's
and
a very meaningful number.
It's a pretty meaningful number. Absolutely. I think it's very
about 1/4 of the sum assured of the. So what are we saying, Rajesh? What am I saying? I'm saying the country is moving from all kinds of noise towards sum assured. And it's growing that very fast. And digital is a large chunk of that sum assured. And Policy Bazaar is a majority of that digital part of the sum assured. So it's as the industry transforms from being a meaningless product to a meaningful product. You would agree, sum assured is a very meaningful product. Boss, if somebody dies, their family gets money, serious amounts of money. If somebody falls ill, a serious bill is being settled, right? Which otherwise would cause disaster, So I think the moment we speak in terms of sum assured, see, you had many companies come and say, we have 99.9% settlement, claim settlement. What claim is there if you don't have a term insurance product? There is no claim. In 5 years' time, your own money is equal. So suppose you invest in a savings product. Within 6 years, your money should be 10 times your money, or your annual premium. And so what exactly is a settlement? It's just your own. That's like a bank saying that, yes, if people ask for their FDs, I return it. Of course you return it. Unless you go bust, you'll return it. But that is not what claim settlement is meant to be. Insurance is a different industry. Insurance is about when the risk materializes, you're essentially betting against a very bad event happening. But if the bad event happens, you lose the bet. And you have to pay a very large sum of money. That is what insurance is fundamentally about. And that's what consumers want from insurance at the end of it, right? So I think as we focus on that aspect, it's materially happening online. And it's being driven by online. In fact, I would go to the extent of saying it cannot happen otherwise. Because if you try to do it any other ways, the impurity that comes in from lack of disclosure, etc., etc. I'll give you a very simple example, right? I have friends. The friend calls me, says, "Listen, I have cancer. Can I get term insurance?" Right? I had another customer day before saying, "I bought this health insurance policy. You guys said there would be no waiting period." Within 30 days, he claimed. He has liver failure. He says, "Yes, I know I have liver failure." He goes on further. He says, "Why would I buy the policy if I didn't have liver failure?" So you see, that attitude that I will only buy when I need is a big problem. And to a large extent, intermediaries solve that problem by suppressing disclosure, right? So I think that problem cannot be solved if you have an opaque channel. And I'm not trying to target any channel here. It's just we're talking conceptually. I'm not talking about Policy Bazaar or direct channels
Yes.
or agency or anything. It's just opaque versus non-opaque. That's all. In fact,
True.
it's a fear I have in my own physical. I also organize physical meetings. But before I organize a physical meeting, I take the disclosures online. Because I believe that if in my physical meeting, my own, even though I may do a check later on, etc., my own person has the ability to disrupt disclosure. And so I have to take the disclosure before the meeting. Again, Rajesh, you would say, but you can always do a verification call. Please understand the verification call can be easily doctored. It's the pre-appointment stuff that cannot be doctored. What you will notice when you speak with me is a lot of my thought process is about making sure doctoring doesn't happen.
Yes, yes, absolutely.
And the moment you think about that, you become the responsible player. And the thing people miss is they think we are a commission agent. We're actually playing on the profitability of the entire book for the insurer. And that's exactly where the biggest mistake is. We are, in essence, playing on the entire book rather than our commission. And making sure that the entire book is profitable for the insurer. And thus we share a part of the profit.
Yeah, that actually a very valid point, and that basically brings me to one very important strategy which you always follow, that when you partner with any of the insurance player, even I heard a very good things about you whenever I spoke with even HDFC Life, that their experience with PB Fintech in terms of the actual claim ratio, each is it's the quality of the book is much better, and that underwriting quality is much better. So how do you differentiate this thing, and how do you keep building upon it, which is a very important moat in your business?
See, Rajesh, the first thing comes from attitude. See, we have now been speaking for about 25 minutes. And I'm saying this as an observer because I observe this all the time about myself. I can have
Yeah,
a 2-hour conversation with you. In the 2 hours, I would spend 90 to 100 minutes talking about risk,
yeah,
problem, risk. I'm not my profitability. I haven't really talked about my volumes. I haven't, and I'm not doing this purposely. It is who I am.
yeah.
A human being can't pretend to be somebody else all the time for that long, right? In any
Sure.
conversation, 75 to 80% of my conversation will be around risk, product, solution, being circumspect about the overall solution. It will not be about how do we increase sales or how do we increase our profits, right? That I think we have enough people in our team who can execute that. But I think the first thing that starts is from the ethos itself. The ethos is one of, now the second thing is we know this is a very, very complicated product because essentially you're trying to be good at disclosure in a segment of consumers where you actually bring very low value. It's a very second order benefit that we bring to the consumer, if you really think about it. Because all we are doing is we are telling the customer that we will not let you cheat. What is the opaque channel doing? The opaque channel is saying, oh, customer, if you have some issues, we will hide them and we'll make it happen. What are we saying? No, we will not let that happen. So in a way, the customer should be asking, then why the hell should I come to you? Because if I'm a clean case, I can get it through any channel. Why do I need to come to Policy Bazaar? Very fair question. At which point I always tell the customer, your claim will suffer if you go through any other mechanism. Because, and I'll explain this second order benefit. Because I am taking clean risk, known risk. That does not mean low risk or high risk. It just means known risk. My pricing is appropriate. My partner's pricing is appropriate. And thus, their ability to settle claims is much higher. And thus, if my customer has been honest, my ability to stand in front of my partners and make sure that the claims are settled is much higher. And that is why my claim settlement is much higher. When somebody has helped with disclosure loops, etc., they themselves become suspect. Their own quality suffers. And they have no face to get claims settled for you, let alone ability, let alone volume. Again, I have not tried to emphasize, Rajesh, that I'm doing, tens of crores of premium for everybody every month. So yes, I have more volume. No, I have a profitable book. I have done the right thing. My customer has disclosed correctly. And now I have the right to get my customers' claim settled. And then I put a lot of operating efficiency. So I tell my customers very clearly, buy from wherever you want to. Nobody can help you at the point of claims the way Policy Bazaar can. At a statistical level, anecdotally, one customer, two customers will always have a different experience. But at a statistical level, nobody can have that experience. And that is why it's a second order. Why are you buying the product? You're buying it for claims, which is why now our sales keep going up constantly and specifically on the risk products, health, term, etc.
And most of your insurance, particularly on the life insurance side, um, uh, of course, most of it comes from digital, but you also have now the physical and digital kind of a model, am I right?
Yes.
So,
Yes.
how that split up looks like as we speak.
I wanted to clarify. Every customer who comes to us has to start their journey on the website or the app. About 25% people start with the app. About 75% of the people start with the website. However, once they have come to my app or the website, I have to work with them to get them to a transaction.
Sure.
About a quarter of the people are able to transact with no support whatsoever, and they just transact on the app or the website.
Mm-hmm.
About a quarter of the people require a call center kind of conversation to help them over the edge. Another one quarter of people require some kind of a video call or so. And another one quarter of people require a physical meeting to make the conversion happen. If I physically could, I would like to meet with every one of my customers and make the transaction 100% physical, because physical has the best conversion rates.
Sure.
And to me, the limiting part is the number of customers looking for insurance, not the number of people that you can deploy to sell insurance.
Mm-hmm.
The first one is the limiting part. If there are 100,000 people, there are 100,000 people looking for insurance. You can't create 110,000 sales out of 100,000 customers, right?
Sure.
And or efficient sales, let's call it. And when a customer is looking, so I'll share one more data point on this. See, at any given point, only about 0.5% of the population, maybe now because of GST, maybe about 1-2% of population is actively seeking insurance products. Looking for those customers is like looking for a needle in a haystack. So whatever form of marketing you do to try to find them out will be too expensive. And that is why cost of acquisition is very high for any insurance company. If customers come to you on their own and say, I want insurance, that is that 1-2% of the population that you are looking for. The biggest asset is if they come to you and disclose that they are the ones who are looking for it. Because then you're only talking to that 1-2% and not wasting your time with the remaining 98%. And if you ask any insurance seller, their biggest task is finding customers, not converting customers. Converting customers is the easy part. The hardest part is getting somebody into a mindset they want to buy insurance, specifically when they are not sick already. If you're sick, of course, you want insurance right now. But if you're not sick, then you don't really want to buy insurance very easily. So I guess the productivity becomes about 20 times higher when you have these customers. So trying to optimize the productivity is not the most important thing. Just making sure that your overall conversion is the highest possible is the most important thing.
I see. I see. So when and I also in the last few years, when I look at your journey of the company, there's always a product innovation. Like, for example, you launched product for the microfinance segment, for the underprivileged segment. So what do you do and how do you price the risk when you do that kind of things?
So we do go into the bottom part of the economic strata. And when we go there, we have to be very careful about the risk capture, because the risk capture becomes harder and harder in that area. And we have to use a lot more sources of data, and not just surrogate sources, but actually physical form of sources. So you would see us going through bank account statements. You would see us going through, and the requirement for documents gets a lot higher at that level. We would look for property ownership. We would look for uh, surrogate things like car ownership, schools your children go to, school fees payment, pieces, etc. It's very important for us to assess in a way. See, I think people underestimate the risk, the financial risk at the lower segments. So you have to be very careful, and your funnels have to become very tight. They can't be very open. Uh, it's uh, it's the same business as lending. Uh, it's not different. The only reason you would believe it's a different business is if your intent was not to settle claims. But otherwise, it's the same business as lending. So you have to be extremely careful as you go into the lower segments. And
So how,
even from our perspective, uh, I would say that's more noise than actual business or actual focus there. A lot of our business actually comes from this 300 million middle class that I spoke about. The half a
Mhm.
billion people below middle class, uh, quite honestly, I don't think we will have a very meaningful business in that area in a short span of time. Uh, yes, we do some support for microfinance, but that's almost like secured lending. It's more like, yeah, if somebody's getting a loan, maybe you provide some coverage for that loan, etc. But it's not a place where we would start selling life insurance directly or start selling health insurance directly. I think we'd be very cautious if we try to do that.
and how do you keep doing those product innovations? So you keep checking the gaps in the market and where you
It's
think is
a See, it's a two ways. It's at least a two-way thing, right? You do check the
yeah,
gaps in the you know the needs and you know the gaps in the market,
yeah.
right? The gap in
Mhm.
the market is everybody wants a product which starts with 0 day waiting period and covers everything and pays 100% of the bill, right? Now the risk you're taking on in that is at a fundamental level, when you're buying insurance, you should not know there's a known expense. It should all be probabilistic, right? So I have a lot of sympathy with somebody who's suffering medical costs, but that has to be an unknown the day you buy insurance. If you already know you're going to undertake medical costs, then it's already too late. You can't expect the insurance company to just pay your bill, right? That's unfair. So I think our job is a lot of that siphoning, and which is why we would, for almost 75% of our customers, we would need you to speak to a doctor. We would need you to undergo a medical. In fact, in the new products that we are going to be starting out, we're going to have 100% medical requirement. And in fact, we are going a step further and saying all the medicals must happen in a few centers only, because we want to control the 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 the, the veracity of those medicals also. Uh, Maybe what I'm saying is politically not right, but from a solution perspective, it is very important that we keep both sides in place. Otherwise, we will not be in a position to provide cover. See, if we start covering everybody and start giving everybody day one cover, and if we relax our underwriting too much, we have to make our underwriting simple, but we can't change the rules of our underwriting. Uh, Otherwise, we will destroy our industry for the very ones that we want to protect it for.
Absolutely. And as you said that, the digital, overall, the digital penetration will keep going up, particularly the segment which you are talking about. And the insurance companies are also probably looking to increase their digital sales, maybe directly or indirectly. So from a PB FinTech perspective, how do you maintain the differentiation? Is it through customer services? Is it through bundling? Is it through pricing? Is it through speed? Or, of course, can
Today,
be combination
today,
of all.
there's a friend of mine who wrote to me saying he's having a bad experience and he wish he had bought the insurance policy from another channel. He wrote to me. I wrote back to him quite matter of factly. I said, I hear you. I know you're having a bad experience. I just shudder to think what would have happened if you had bought from any other channel. And I know the response rates of organizations, and I know our response rate. And I think there is a 1:6 gap at least, because I see that every day in the way we respond to our customers. Between nowadays 75% Sarabhi, 25% me, we directly respond to customers. I don't see that happening, and I'm not trying to comment on anybody. I just don't see that happening ever from anybody else. I think you become part of a process, you take time, and there are very simple reasons for it. See, for insurance industry, settling a claim is a cost only. And it's a time when they're trying to check for fraud. The whole process, because of the opaque selling process, in a way, the fear is that through the opaque selling process, some misdisclosures happen, and that needs to be verified now before the claim happens. On our side, because we've already done the work somewhat upfront, that fear is not as high now. And so a lot more emphasis can happen there. But I think the biggest differentiator across the world in insurance has to be claims. I think people who talk about having a slick website and having just a easy journey to buy and all quite haven't understood the industry. This industry will be won by whoever can settle claims better. Always.
So considering that, your ability to underwrite, of course, is very high. Your ability and your, what I would say, the disclosure norms are, of course, much higher compared to probably any other normal agency. When you look at your renewal premium, be it a life or be it even, health insurance, how are they trending?
They're trending very strongly. And if you think about it in life, it would be about 2 to 3% higher than agency, a lot higher than banks on an annual renewal basis. In health, again, very similar numbers, 2 to 3% higher than agency, almost 10% higher than banks, 10 to 15% higher than banks on an annual basis. And that is okay. That's kind of becoming par for the course. But I don't think it is just the renewal trend. See, please do appreciate, despite having a high claim settlement, we still maintain lower claims ratios than most other channels. And on a combined operating ratio, this is where I was mentioning that we take responsibility of the entire premium, right? I think today, if you look at health insurance, the agency is working well over 100% in the combined operating ratio. Claims ratios plus, we are operating just shy of 90%, 88, 90%. I think these two will need to at some point come nearer to each other. Now, when they come nearer to each other, if one side is having better disclosure, that will mean one will be having far higher claim settlement and far lower prices compared to the other. Then you have to beg the question, why would the other side exist?
Got it. Interesting. And when you look at, since technology is the backbone and is the, the key strength of PB Fintech, it has been now 15 plus years. Technology is, of course, changing rapidly. And I think you have mastered the art, be it a fraud detection or be it a underwriting or be it a various other examples, whenever I read your annual report. So do you think this use of AI and ML, from your perspective, what are the various levers which you think which can significantly reduce your cost from here on?
I think AI is not about cost reduction. As of now, it will become, but as of now, it is not. Today, it
Okay.
is largely about efficiency enhancement
Yeah.
and risk reduction.
Okay.
So a lot of the effort is going into things like facial recognition, lie detection, voice modulation, those kind of things. A lot of effort goes into speech to text, uh, and then the analytics of it, again, from a risk detection perspective. I think voice to voice interactions are not at a point where insurance sales can move on to them, and also not at the same price point, which is why I said that is perhaps 2-3 years later that the cost of that comes down dramatically and it actually starts to become meaningful. I think in customer service, some voice to voice will come in, but once more, not from a cost reduction perspective, more from a quality enhancement and quality assurance perspective. Even in claims, it will come in. But again, I am seeing a lot of AI as quality enhancement, not cost reduction. And quality assurance, right? Basically, what is quality? You get the same thing repeatably again and again and again, and constant improvement. And I think that is what AI can assure. A bit like Policy Bazaar or the initial web, in a way, assured a certain amount of transparency. This will assure the second level of transparency. Every word you have said, every word the AI has said is recorded, very well documented. AI is not making mistakes, especially in disclosure categories, making sure everything that has to be disclosed is being disclosed, right? So I think those are the places where you will make a material difference. Because I'll say it one more way, Rajesh. When I look at net present value, our total sales and service and claims cost is about 25% of the net present value.
Okay.
So suppose I could materially reduce it to by half also. It's not like it's changing my life. You know, the 25 is becoming 12.5, but actually the 75% is becoming 87.5. I'm not so desperate to increase the 75 at this point. Really, that can wait. I think what I'm really interested in is making sure that the overall premium goes up. And for that to go up, I think quality assurance is a bigger aspect. So I think specifically in the insurance category, quality assurance has a very significant meaning for the consumer.
Understood. But when I look at your last 5 years, and if I look at your call center employee cost, I'm going a little specific, but I just thought from the margin lever perspective, I think from 8% it reduced to about what I think close to 5%. So the productivity is actually improving. The technology is getting to its use, and with more of that happening, do you think this can?
See, we are also investing, Rajesh. We're also investing a lot more. So we are investing a lot more into claims. We did not, 3 years ago, we did not have any people handling claims. Today, we have more than 1,500 people in our company handling claims. Please do appreciate we don't get paid for handling claims. We're not charging anybody anything extra for settling claims, right? But that does improve our ability to get more customers. And that is why when I say confidently to my friend that, at a point of claim, you should really dread, if you have not bought from Policy Bazaar, the situation, right? I think the reason I'm confident of that is because I know that we are actually putting in a huge amount of effort in that direction, not just having the right to put in that effort. See, one thing is the right to put in that effort. You've done good disclosure, you've got good volume, you've got everything else, but then actually executing on it, right? So I think both of those make us confident that we are doing something better for the consumer. And so consumers should automatically buy from us. And in a way, that's what we're seeing in our results, right? That's why we see ourselves growing faster than the industry.
I see. And when you look at from that angle, in terms of your investment, in terms of your quality assurance, when you look at the claim settlement index kind of thing, is there anything, something which I'm sure you must be tracking?
We look at claim settlement rate, and there we are obviously doing better than ever in the past. But please do appreciate our volumes also going up very fast. So doing that with volume, see, I mentioned one thing to one very senior person. I said, for the last 17 years, we have consistently done 3 things. And these are not possible unless you are very circumspect. We have grown the acquisition of new customers. Every year, we are acquiring more new customers and significantly more than the previous year. I'm not talking about the back book. The back book is automatically growing. The second thing is we have become more and more profitable for our partners constantly. We are more and more profitable for our partners. And thirdly, our claim settlement has been improving every year in a market where actually claim settlement is becoming worse for consumers. You
I
cannot
see.
achieve these three if you haven't really solved the problem. Which is why I also say, as we become bigger, we are a part of the solution. We're not a part of the problem. Because some things, when they become bigger, will be a part of the problem. Will be part of the solution,
Mm.
because insurance companies make enough profits, customers have their claims settled, and new customers are acquired.
On that note, since you said that, insurance companies also make, of course, and they must have make good money. But time and again, some news item always claims that the regulator is talking about, capping the expense ratio to make insurance more affordable and all that stuff. So I don't know, what does it mean? How do you read into it? And do you see any, what I would say, pressure on the take rate, the commission by the entire distribution channel? This is not specific to PB Fintech. Any thoughts on that?
See, I think for the last 17 years, these conversations have been going on. Up to 2 years ago, we actually had commission caps and we had separate expense ratio caps. And that is where the insurance companies were paying more than the commission costs. Please do appreciate, till 2018, on our entire life insurance business, the commission allowed was zero. Entire. Till 2018. We did IPO in 2021, but till 2018, the entire commission allowed on our life insurance business was zero. But what was happening? They were paying as outsourcing, they were paying as marketing fees, right? Because eventually the percentage. So all I'm trying to say was, till 2 years ago, we had commission caps. The commission caps went away. Did our take rates change?
No.
A lot of people said commission caps are going up, so your take rate should go up. They did not change at all. So I think the market forces are where they are. And I think the same insurance companies that say they want caps, then go and break those caps. Then they have GST issues. Then they have income tax issues. Then they go back to the regulator and say, no, 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 please don't have these caps. They got them removed 2 years ago. So this is a cycle. I call it a headless cycle. When you don't know what you want. You want profitable business. Focus on that. You want quality business. You want quality customers. You want good disclosures. You want to be in a position to settle claims. Focus on all those things. Don't focus on problems that are not your problems. GST is a problem. GST is a problem. GST is a remove GST. Remove GST. GST gets removed. Now, removal of GST is a problem. Removal of GST is a problem. Removal of GST is a problem. Everything is a problem which is outside of your control. Is there something which is inside your control which is also a problem? I would say,
True.
might as well focus on that.
Absolutely. That's how actually it should be. And they're always,
Like, somewhere the government should be asking that, look, you guys were all asking for GST to go away. Now, the moment GST went away, why is it a problem? Right? Look, I'm not trying to be nasty about the situation, but the point is, we have to be a little more thought through. 2 years ago, you have got expense. You have all gone to the regulator and got the expense caps removed. And your take rates have not changed a bit before or after.
Yes.
But I don't know what you're thinking. And it's the same people. So I don't.
Yes.
Like, the CEOs may have changed, but it's the same companies. So I don't know. I actually don't know what people may be thinking.
You're right.
My point is, I usually tend to stay away from all this because this is just noise. This is just noise in the industry. See, I think the important part of delivering a solution is staying focused on the solution and being solution oriented, and also ignoring noise.
Got it. So when you like, you
And
know, when
I'll go further on that.
Mhm.
2018, I had 0% on life.
Mhm.
2019, it changed. My take rates were the same. 2023, 24, I had commission caps. 2025, I didn't have commission caps. My take rate stayed the same. It is just classifications that change. You will do
Got
the
it.
same thing. With a bank, you put your own call center people, you put your own people to make the sale happen. So you call it outsourcing. No, I think, people should realize that people should just grow up and kind of stop playing these games. That's all. Makes no sense because eventually they are the ones who face the trouble.
Sure. When you look at, maybe fintech over next, 5 years, as the insurance industry further transforms and more digitalization of the economy is also supporting, and you have a open statements in terms of how do you look at your company's own profits over next 2 3 years, how do you see it, now? Because I'm sure every year you also must be relooking at it and thinking that, what do you think from here? What about next 3 years? How do you look at it?
See, I think I always take a longer than 5 year view because 3 years is pretty uh, clear. Rajesh, if you draw a P&L or I draw a P&L
Oh,
or
yes.
anyone else draws a
Yeah.
P&L, even a
Yes.
3 to 5 year point of view, nothing much is going to change in Policy Bazaar. Like, not more than a 5% deviation would happen from any of our P&Ls. Whether you draw it or I draw it or whoever else draws.
Okay. No, I mean in terms of
That's
the
what
growth.
that's what we've seen historically.
Yeah. Yeah.
And I
No,
think
Yashish,
what
no,
I focus on is growth. What you can vary on is growth.
yeah, exactly. That's
So
what I was coming to.
to me, the most important thing is that we continue at above 30% growth for the
Mhm.
next 5 years.
Okay, got it.
And I
Got
think
it.
that is the most important aspect. If that happens, everything else is just a
Yes,
back of
absolutely.
the envelope calculation. That's all.
I completely agree. And moment you have a that high, what I would say, the cash, because it's a cash machine or what it be, because that's how insurance industry works. Of course, last 10, 15 years, you had accumulated, I would say, losses, and from there it will become, very high profitability level for the company. Any thought process, what you plan to do? Do you, how do you plan to use the excess cash? And any thoughts on the any segments or any agencies? Of course, you already have Paisa Bazaar, but any other thoughts?
I don't think we would there is any use of cash proceeds that is out there or in the horizon that we know of. Overall, the business is profitable. It's putting out more cash. It's creating more cash. At some point, it will hurt us to have so much cash, but it is also okay to have a certain amount of cash because uh, you know cash gives you more stability, more strength, and there's no harm in that. So I think the current level of cash is good. I think as it
Yeah.
grows, let's see uh, what we do with it. But that doesn't mean we have any clear plan of how to use it as of today.
Great, fantastic. My last question, Yashish, since this webinar is to be, I would say, will be listened very carefully by many founders, many even the young entrepreneurs. What is your message to the those young entrepreneurs who might be also rewinding back to your 2002 and 2006 and 2008 days, and they're probably right now sitting at that particular year. What would be your message to them?
I always see all young people in a way like my own children. So I wrote to my children recently and
Yeah.
I said a very simple message. I said, everybody knows what is right for them and what is wrong for them. And everybody knows what they have to do. Nobody can come and really tell you what to do. I think the big difference is between people who do it and people who don't. So it's eventually execution. How much do you actually get done and discipline, right? How much do you actually get done in a day compared to your plans? And how much time you waste in a day and how much time do you execute in a day? I think those who keep executing, keep growing. The growth is incremental. It is not dramatic. It is incremental, but it builds up over time in a very stable manner. And when they look back 10 years, 15 years later, they have achieved a lot, right? I think the second part is, which I always tell my kids is, don't cheat yourself. Don't say things to impress others or investors or your board or your parents or anybody. Do things that you in your own heart believe are the right things to do. I think you will achieve a lot more that way. Again, it will be incremental, it will be painful at times because people will not understand what you're doing. But if you think it is right, because Rajesh, what I have seen interacting with people across the last 20, 30 years, professionals, 90% of the people are not doing or saying things because they believe them. They're just saying things because they don't know what else to say. And so if you become that 10% that actually follows your heart, follows your heart and mind are totally aligned, I think you would do quite, well. It doesn't matter what your heart is aligned on. Like I am aligned on social security, right? For the middle class. Somebody could be aligned on something else. And I'm sure if you find something meaningful that you can stay aligned with it for the next 10, 15, 20 years, then yeah, you're on the right track anyway. So I think those two, have purpose, follow your purpose, don't try to impress people. And second is actually execute. Don't just, make dreams and then don't follow through. How many people that say exercise करनी है, diet करना है, ये करना है, वो करना है, but never do it. कल से करेंगे, कल से करेंगे. So अगर आप मेरा WhatsApp वाला मैसेज देखोगे, कुछ लोग पूछते हैं, it says SWUR, which is just start where you are. I know that it doesn't make alphabetic sense, but yeah, that's basically what it means. Start wherever you are, whatever you have, that's it.
Yeah, you are absolutely right. I think the execution, and execution, that's the only success mantra, and there are no shortcuts. Discipline is critical, and I think that's something very, very important for long-term wealth creation as well. So with that note, I think I already exceeded your time by 3 minutes. So sorry for that, and thank you very much, for your insights into the insurance sector, insights into your thought process, and I think very novel concept in terms of the social security. And I'm sure, and I wish all the best that
Thank you very much,
achieve
Rajesh, and wish
vision
you
and
all the best
mission.
as well. Thank you.
Thank you, sir. Thank you very much for participating in this AAA Winner Series webinar. Thank you very much once again. Thank you. Bye-bye.